Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor at FinTech Futures, and for this episode we're joined by Dr Philip Intallura, head of quantum technologies at HSBC. Phil, welcome to the show.
Hi Paul, thanks so much for having me. Great to be here.
So it's great to have you here. And just to get started, let's quickly let us know a bit more about yourself and your role at HSBC.
Yeah, sure. So I'm Phil Intallura. I look after the Quantum Technologies program at HSBC. I've been involved in quantum technologies for over 15 years in one form or another. And my role is ultimately to prepare the bank to unlock the potential of quantum and help build cyber resilience against the emerging threat that the same technology brings.
Sounds great. And again, thank you so much for taking the time out to speak with us today. On the show this week, we'll be taking, as we've touched upon there, a deep dive into quantum computing. So that includes how the technology works, its key use cases, and the impact the growth and maturation of quantum computing could have on financial services in particular. We'll take a look at some of the risks and benefits of technology in relation to cybersecurity and payments, and what the wider industry needs to do to prepare for a quantum-enabled future. And we'll also hear about how HSBC has been experimenting with quantum computing and how it's looking to utilize the technology in its own operations. That's all to come a bit later, but as always, we'll open with our news in numbers segments. This is where our guest has gone out and found a news story featuring an interesting number to discuss and get us started. So, Phil, what have you brought along for us today?
So the number I've brought for you today, Paul, is $1.3 trillion. And that number is the value at stake for the first four industries likely to see most impacts of quantum computing by 2035. What's even more interesting is of that value, 55% of it is attributed to financial services. And that's because the type of problems quantum computers can solve are very close to the types of model we run in the bank every day. So this number is quite interesting because I often get asked, why on earth is a bank looking at quantum computing? Well, this is one of the reasons.
Yeah, I mean, that intersection between quantum computing and financial services is a really interesting area. I know the term has been flying around the industry for a few years now. It's picked up a fair amount of hype at one point. But I think, really looking beyond that hype, it'd be great to understand a bit more about the technology itself, we could probably be here for an hour or two just trying to delve into how the technology works. I know it's a really complex topic and it's made my brain hurt slightly just doing the research for this podcast, but it'd be great to understand a bit more about where we stand with the technology in the industry now as well. So, to start off with, can you give us a brief explanation of what quantum computing is and what we're specifically talking about when we refer to quantum computation?
Sure. I think at its core, quantum computing is a whole new approach to processing information that leverages the peculiarities of quantum mechanics to perform certain complex calculations at unprecedented speeds. Or the short version of that is quantum computers can compute stuff faster than we can do today on our best classical computers. But I think what's important is that they are not simply faster versions of classical computers, nor are they an extension of Moore's law. They are fundamentally different. The term quantum refers to atomic and subatomic matter like electrons, ions, photons, and these are some of the smallest building blocks of our universe. And these small building blocks adhere to the rules of nature that we just don't experience every day, right? So it's the properties of things that you may have heard like superposition, entanglement, coherence. It's these strange properties at the very small scale of our universe that is the basis for computing things in radically new ways. So in a digital computer world, which is made up of, or information is made up of bits, that's the basic element of information. It's a 0 or it's a 1, but it's nothing else. In a quantum computer, you can have a qubit that can exist as both a 1 and a 0 simultaneously, thanks to a principle superposition. And so you can think of superposition like a spinning coin on a tabletop. It's an equal superposition of heads and tails as it spins, only until you actually measure it, when it will give you a result of heads or tails. And so along with some other quantum effects, superposition allows a quantum processor to explore multiple potential solutions in parallel, which significantly reduces the time it takes to find an answer compared to classical methods for some problems. And so we can design quantum computers, we can actually control them. And one of the reasons that quantum computing is getting more and more press coverage is because there's increasing progress in the engineering and manipulation of quantum mechanics to make this a reality for commercially relevant problems. And so the ultimate goal is to achieve something called commercial quantum advantage, which is the point at which we can solve a real world problem on a quantum computer faster than any classical algorithm on any classical computer.
Excellent. And I mean, what would you say then are the key benefits of quantum computing over more standard methods? I mean, is it largely that speed there, or what kind of factors can impact quantum computation as well?
Yeah, well, I mean, because quantum computers operate so fundamentally differently, you can't just run existing models on a quantum computer and expect to speed up. Completely new algorithms need to be developed that are compatible with quantum machines. And importantly, that also show theoretical speed up over classical models. This is why a quantum computer can't just do anything and everything faster. It's only certain classes of problem. Now, that said, there are some distinct areas that are being researched in academia and industry where we believe there will be ultimately the ability to demonstrate so-called quantum advantage. So let me go through a few of these for you because it spans several industries. So one of the key ambitions is to radically improve the way we design new materials and pharmaceuticals. And so there's a field of quantum chemistry simulations broadly where quantum computing could truly shine because it will enable us to model chemical reactions with unprecedented accuracy. And that is a pathway to accelerating the development of new drugs and materials. So, a very important area of exploration. So the second area is transport and logistics, which could also see a major overhaul. And so you can imagine being able to optimize the entire network of routes and schedules for global logistics in a fraction of the current time it takes. Quantum computing promises to do just that by encoding complex network structures using algorithms like Grover's search algorithm, which is one of these proven theoretical speedups. And these are deployed to find the most efficient solutions much faster than conventional computers. In the financial service sector, the impact of quantum computing could also be transformative. This is, of course, why HSBC is looking at this. And I can go into more details of this a bit later. But for example, pricing complex financial instruments often involves solving intricate optimization problems. Quantum could streamline this process. It could tackle some of the challenging aspects of these problems with algorithms that are much more efficient than classical versions. And so within financial services, that can help things like optimizing portfolios with a level of precision and speed that's currently not possible. Also in financial services, you've got things like risk management. We do a lot of simulation of market conditions, and quantum computing can offer more insights into risk management, compute things faster that are currently beyond our reach. And we use models and approaches like Monte Carlo, which is a simulation approach of running many different scenarios to understand what average expected outcomes would be. And quantum is able to run these types of calculation, again, faster than we can do today. I can go on for the sake of, just making the point. It's beyond any one industry. It's beyond any one type of problem, but there are certain very specific types of complex problem where if you apply quantum computing, you can actually unlock problems that you just can't do today, or you can do them faster or more accurately than you can do today. And so this is where some of this value that I talk about is coming from. It's being able to do these types of calculations much more efficiently than you can possibly do on the best classical supercomputers.
Excellent. Yeah, I think we can dive into some of those, like I said, there's financial services specific areas shortly. One thing I did want to touch on just briefly before moving on, I mean, given the computational power and energy that quantum computing requires, is there any concern around potential climate impact as well there, and what's being done to alleviate that?
So that's a great question. We're on the brink of what could be a technological revolution, but with all great advancements, there are, of course, challenges and concerns, particularly around environmental impacts. And the reality is this question has got quite a nuanced answer. So let me give it a go, but you're going to have to bear with me a little bit as I try to articulate the several dimensions that this question needs to be answered in. So it's true to say that most quantum computer technologies do need to be kept super cold. And when I say super cold, I'm talking about almost absolute zero for them to function properly. And keeping them that cold isn't just a technical challenge, it's an energy intensive process. But here's where the debate gets interesting, because despite the energy demands for cooling, quantum computing has this incredible potential to be more energy efficient in the long run. Because if you think about it, if a quantum computer can solve a problem significantly faster than a traditional computer, we're looking at potentially reducing the overall energy consumption for those computations. It's about doing more with less, which is a win for sustainability. And that argument's also reinforced because most quantum computers are accessible through the cloud at the moment. And so if you've got cloud-based compute or cloud-based quantum compute, then actually the more users you have accessing those machines to run faster calculations, you can see as the usage scales, the impact on environment reduces on a per unit basis. But the story doesn't end there, because the research community is also buzzing with activity, because there isn't just one type of quantum technology. There's many different types of modality, and there are many groups exploring quantum computing technologies that don't need as much energy. And so there are different approaches like photonic qubits, which use particles of light as the two-level system to compute quantum calculations. And so if you can operate technologies like this, it could open doors to much more sustainable quantum computing. And at the moment, we don't know which modality is going to become the norm. And indeed, it might be that there's many different types of quantum technologies that coexist. So that's the second element. And then there's a third element, which is there are several areas within chemistry that quantum computing is being put to at the moment to see if we can tackle some of our most pressing environmental challenges. And to give you an example, there's a century-old method for turning nitrogen in the air to ammonia-based fertilizer for crops called the Haber-Bosch process. The Haber-Bosch process is hugely important because it helps us sustain about 40% of the world's population, but it takes so much energy that it's responsible for 2 to 3% of the global CO2 emissions. And so there's active research going on right now to better understand the chemical reactions using quantum computers to see if we can make this process more efficient. So to wrap that up, whilst there are definitely genuine concerns about the energy use and climate impact of quantum computing, there's also this strong drive within the community to address the challenges head on through technological advancements, renewable energy, strategic application. I, for one, are pretty confident that we're looking at a future where quantum computing not only transforms our technological capabilities, but does so in a way that's mindful of our planet.
Thanks for that, Phil. And obviously you mentioned a few use cases there in financial services specifically. I mean, looking back at those, can you tell us a little bit more about those, go into a bit more detail about those, and what are the key use cases, I guess, as we look at the technology right now?
Yeah. So as I said at the beginning, the value opportunity here, the 1.3 trillion, which is the estimated value at stake for applying quantum computing in the leading four industries, comes down to the types of problem that quantum computers are able to solve and how closely they match the types of problems we solve every day in financial services. And that's why 55% of that opportunity is attributed to financial services. Now, I've mentioned a few of these earlier, but financial services is full of optimization problems like portfolio optimization, pricing optimization, network optimization. And so there's a whole class of optimization problems that you can potentially apply quantum computing to. Machine learning is another class of problem that quantum is poised to benefit. And so machine learning is used across the bank in many ways, like decisioning on whether a transaction is fraudulent or not. It's able to take many different parameters and make very accurate estimations as to whether something is true or not. It's binary classification. And then the third big area within financial services is around simulation. And so this is another area we do a lot within the bank, financial simulation for risk scenario planning, for stress testing, different scenarios, what the interest rates might be doing across different countries, climate risk, within our insurance business, how we price, and so forth. And so this is the key commercial reason as to why some financial services organizations, including HSBC, are already experimenting with quantum computing. It's a key driver for us to become an early adopter. So that's the positive side, which I sometimes refer to a fence. This is what we're kind of looking to capitalize on. But there is another very strong reason also to be looking at this technology. And that reason is on the defense side. Because I told you quantum computers can solve a specific range of problems more efficiently than the best classical supercomputers. Well, one of those problems is factoring. And so if you take a very large number and try to calculate the prime factors, it's a very hard problem. And I can talk a little bit more about this in a second when we cover cryptography. But the key message is that one of the things that quantum computers are going to be able to do is they're going to be able to break most of our modern methods of encryption. And so we have this whole paradigm shift required in order to modernize our cryptography so it becomes safe from the emergence of powerful quantum computers that can break the types of problems, very hard problems, that modern cryptography is based upon today.
Excellent. Yeah, we'll definitely get into that a bit later. I'd just like to take a second and just ask how HSBC first started looking into quantum computing then. What were the main driving factors behind that decision?
So I think quantum started to get seriously discussed in HSBC when Google announced in 2019 that they had achieved quantum supremacy. And essentially, Google researchers were able to solve a calculation in 200 seconds that would tie up a supercomputer for 10,000 years. So that's what quantum supremacy means. It's something you can do in a fraction of the time than best classical computers can do. But there are two issues with this paper. The first issue was the problem was artificially created to be easy for a quantum computer and hard for a classical computer. So the speed up doesn't have any relevance to everyday problems. And this is one of the reasons I don't like the term quantum supremacy, because it causes a lot of hype. But the second issue is, since then, classical approaches have caught up. And scientists in China, for example, have done the calculation in a few hours with ordinary processors, which can outperform Google's quantum computer. Now, I just say that as context because although there was a little bit of scrutiny on that paper, what it did do is it started to get boards talking about quantum computing because the nuances of the achievements didn't make the headlines. And so the boards across the globe started to mutter about should they start looking into what all of this quantum computing is all about. And so I think that's where it really started. And it took about 2 more years before we formalized the quantum technologies program at HSBC, but it's now part of our group innovation strategy and sits along other emerging technologies like central bank digital currencies, centralized identity, and of course, the popular topic of the moment, generative AI. And so the purpose of the quantum computing program is to ultimately build readiness to unlock the power of what this technology can bring, but also to help us defend against the emerging threats. And I think, to be clear, this is not a promise of a near-term ROI or return on investment, because quantum technologies are still some years away before they give us real, true commercial value. But in order for us to get first mover advantage, I think there is a good understanding that we have to have stakes in the game to be able to really understand how to apply and where to apply this technology when the time comes. And so from that kind of point, we developed this strategy, we built capability and a team, and we've started to spin up several use cases which are done in partnership with different parts of the business to really understand where we have computational challenges and where we can potentially apply this technology. And so part of that use case exploration is to maybe do some smaller tests today, get some understanding from a smaller type of problem, what advantage it might give us, and then use that as points in the road as the technology continues to develop and it becomes large enough and powerful enough to apply at a production type of scale.
As you mentioned there, obviously this is still an emerging technology, but what's the current state of play then with this in financial services at the moment? Is it still very much at that testing phase, or is it being rolled out into any live use cases at the moment?
I think everything regarding quantum computing, in the sense that most people think about it, which is to achieve commercial quantum advantage, to do something better and meaningful, which outperforms our best classical methods. is very much in testing phase. And that's not least because quantum computers are not yet powerful enough or stable enough to do something meaningfully better than classical technologies at the kind of scale we have in production systems. That said, there are what I would call bridging techniques, which still rely on quantum algorithms, but you kind of run those on specialized classical technologies. And so we have taken some of those into production size experiments. So nothing's in production at the moment, but in terms of the scale, we're exploring some of that on production scale experiments because you're able to get a little bit of both. You get a little bit of quantum in there because you're running these new algorithms, but you're able to run it on stable classical technology. Now, what this won't give you is quantum advantage because you need the real quantum hardware with the superconductors or the electrons, the photons and whatnot to take advantage of all those quantum effects. But what you might be able to do with these bridging technologies is actually outperform models you have in the bank today and achieve commercial advantage. And so I think that's distinctly part of our program because it isn't all about beating the best possible supercomputers that we have in the world today. It's actually, can we beat what we've got in the bank today? And can we do it in a way that uses a quantum algorithm? Because if we can do it in a way that beats what we have today using a quantum algorithm, it actually also ticks the box in preparing us for applying that algorithm to real quantum hardware as it arrives. So in summary, it's generally use cases that are in testing environments and testing phases, but we are starting to push the boundaries on these hybrid type of technologies that give us the best of both, but will set us up for this for real quantum hardware as it becomes commercially viable.
Excellent. Can you go into any more detail, I guess, about some of the experiments that you've been running at HSBC, then some of the key kind of target areas you've been focusing on?
Yeah, so our philosophy at HSBC is to identify real world use cases in our organization and partner with business specialists who have the domain knowledge, along with technology partners who are developing the quantum technology or the hybrid technologies. So we're not sitting in a lab just trying to conjure up ideas ourselves. We're bringing this into the forefront of what we do in the organization in terms of types of models we use. Now, let me give you an idea of a couple of use cases we're working on at the moment. And we're working on several, but I'll cover a couple in a little bit of detail. So the first one we're looking at is applying quantum machine learning for transactional fraud detection. So fraud is a problem for all financial services companies. Attacks are becoming more sophisticated, and there's a very fine balance between stopping fraudulent transactions and not disrupting customer experiences through false positives. So, Paul, when you're trying to buy your coffee in Paris, it's annoying if your card gets declined because the system has triggered an unusual activity. So we can't just stop everything that's slightly suspicious. And so machine learning helps us here to discriminate between genuine and fraudulent transactions based on many different factors that we have access to. So with quantum machine learning, what we're looking to do is we're looking to improve the precision of our models further by taking advantage of these higher order correlations that we can have access to in the world of quantum. And so in this case, it's more about marginal gains because just a couple of percentage points in improving the precision of detecting fraudulent transactions from genuine transactions is going to make a huge difference to both customers and the bottom line through. So that's a very important use case. And I've talked about transactional fraud detection, but you could apply that to many different types of fraud models across many different types of business areas. So it's got a lot of applicability across these types of use cases and across our different markets that we operate in. Let me give you a second example that we've been looking at, which is on portfolio optimization within our trade business. So if you're a supermarket trying to buy strawberries from a farmer in Spain, today we broadly price transactions based on static annual data. Now, this is robust, but if you wanted to include additional risk factors and sustainability goals, for example, like, what's the method of transport of those strawberries? What's the underlying product? What's the sustainability profile of the company involved? This starts to become a complex combinatorial optimization problem. And at some point, you've got to stop adding in factors because the computer's going to fall over. It's going to take too long to compute what the answer is, what the price is, for example. And so this kind of simplification is what everyone does today in order to get a timely but reasonable answer. But with quantum technology, you can start pushing the limits further, because as you include more and more factors, you can effectively use more complex models of quantum algorithms to help you differentiate pricing based on business objectives at any given time. And so these objectives can be added and changed based on changing priorities through the year, but you can start building more variables and more constraints into your models to make them align more closer to these types of business objectives. And so that kind of gives you another example of where you can actually get much more accurate outputs or much more aligned outputs to business objectives to improve the overall portfolio of your trades in this case. We've got several more in progress, including on the cybersecurity side, but hopefully that gives you a flavor of when I talk about real world problems, these are some of the things that we're looking at. There's many, many more in the bank that sit under these classes of portfolio optimization or quantum machine learning. The key message again is we're not doing this in isolation. We're actually looking at real models in the bank and real business objectives to say, can we apply this type of quantum technology either now through the bridging technologies or the hybrid technologies, or in the future to help actually solve some of the challenges that we have today within the bank.
Excellent. And I mean, I guess looking at that cybersecurity side that you touched on there as well, what would you say are some of the key benefits and positives there to using quantum computing here for banks and financial services firms?
So to understand the impact of quantum computing on cybersecurity, and this could be a whole podcast in itself, to be honest, but I do have to take a step back first just to articulate how we currently protect our digital communications, right? Otherwise, it won't make too much sense. So traditional security methods like RSA, crypto systems, and RSA basically stands for it's derived from the initials of the surnames of the creators, Rivest, Shamir, and Adelman. But RSA is basically the method upon which public key cryptography relies on today. And the system allows two parties to establish a secure communication channel without needing to exchange secret keys in person. And so, Paul, you might remember some films where you see an individual handcuffed to a suitcase transporting that key in person to its desired destination. But of course, that's not practical. And so public key cryptography does this for us. It's a cornerstone of modern internet security, and it enables secure transactions and communications across the globe at scale. So that's how public key cryptography works today. Now, in about 1994, Peter Shaw, who is a professor at MIT, introduced a groundbreaking development in the field of quantum computing. And he devised what's now known as Shaw's algorithm, which is an algorithm capable of breaking RSA, I mentioned this earlier, by effectively factoring large numbers into their prime constituents. Now, this task, while straightforward for a normal computer to perform in one direction, so multiplying prime factors is easy, it's incredibly difficult to reverse it using classical computing methods. And to give you an idea, it would take more than the age of the universe to factor RSA 2048 keys using supercomputers. And this is essentially the protocol used today. And so the security of RSA cryptography hinges on this difficulty. So as long as factoring those large numbers remains impractical, the system is completely secure. There's nothing to worry about at the moment. However, should the ability to factor them efficiently become possible, which is what a large-scale quantum computer will be able to do in the future, then the security of RSA is fundamentally compromised. And so Shaw's algorithm reveals that with a sufficiently powerful quantum computer, it's possible to factor these large numbers quickly, which undermines the security foundation of our current internet encryption. Now, I do want to emphasize, we do not have quantum computers capable of running Shaw's algorithm to break real-world encryption today, but the theoretical proof is there, and actually factoring of much smaller numbers has been done. So the question now is not if, but when such a quantum computer will be built. And so there's a pressing need to develop new forms of encryption that can withstand quantum attacks. And not least because the time it's going to take large organizations that operate across over 60 markets is going to take a long time and cost a lot of money with huge complexity to transform that cybersecurity landscape into something new. And so this is where you may have heard of something called post-quantum cryptography comes into play. It's one of two methods, but the goal of post-quantum cryptography, or PQC, is to create cryptographic systems that are secure against the capabilities of future quantum computers. And the urgency of this development is underscored by the fact that information encrypted today under the assumption of security could potentially be decrypted in the future through a retrospective attack. And it's sometimes referred to as the Y2Q moment, which is reminiscent of the Y2K bug, the millennium bug, that signifies the point in time when quantum computers become capable of breaking the cryptographic systems that protect our current digital communications. And so that includes everything from emails to secure transactions, and really highlights the urgency in developing quantum-resistant cryptography. So if we don't do this and our cryptography becomes susceptible to quantum attacks, then it's almost an existential risk. Not unique to financial services, not unique to HSBC. This type of encryption is used across all industries around the world. So it's a whole shift that we need to make, but we're particularly concerned around this within financial services because of our business model, the type of data we hold, and the complexity of transforming our cybersecurity landscape. So that's why, as part of the motivation of running this program, cryptography is a big part of it. And we're looking early about how we migrate our cryptography systems into becoming quantum resistant right now.
Excellent. Yeah, and you've mentioned post-quantum cryptography there. HSBC has been doing some work in quantum key distribution. Can you tell us a little bit more about that as well?
Yes, that's right. And so there are actually two approaches, or two broad approaches, to protect against the threats posed by quantum computing to our current cryptographic standards. One is math-based, which I've briefly described, which is post-quantum cryptography. And these are new mathematical methods that do not depend on factoring, but they're still mathematical methods nonetheless. The upside to those is that they're scalable, they're easier to implement, and we're used to running math-based protocols. That's what RSA is as well. But the downside is, who knows if someone comes up with a new algorithm that makes some of these new protocols also susceptible to quantum attacks. And so there's no guarantee on new math-based approaches. And so the other way of defending against quantum attacks is not maths-based, but physics-based. And it's through an elegant solution called quantum key distribution. And what quantum key distribution does, or QKD for short, is it leverages the principles of quantum mechanics to enable two parties, which are traditionally named Alice and Bob, Alice being the sender and Bob being the recipient. So it will allow them to exchange cryptographic keys in a manner that is inherently secure against eavesdropping. And the beauty of QKD lies in the quantum principle that observing a quantum state inevitably alters it. Therefore, if an eavesdropper, Eve, attempts to intercept the key, their interference can be detected. And it will allow Alice and Bob to discard that key and start afresh. And so this method of key exchange is rather fascinating because it uses the randomness inherent in quantum mechanics to provide a foundation of creating cryptographic keys that are theoretically impossible to predict or replicate. It's a randomness that's crucial for creating secure encryption that can withstand attempts of these types of attacks. And so there's a lot of interest both using terrestrial and satellite-based systems to achieve this type of global secure communication. So on Earth, quantum key distribution can be effectively implemented over short distances, such as within a metropolitan area. And actually, HSBC right now is distributing keys between our UK head office in Canary Wharf and a data center in Berkshire, some 60 kilometers away. But if you wanted to do that over longer distances, we then encounter some challenges because this is going through fiber networks. And as you increase the distance of those networks, you start to get increase in losses over that fiber. And so you need something called quantum repeaters, which amplify the signal. But these are things that aren't really available yet to deploy. They're under kind of research and development. And so If you then take the concept of, okay, so how do you connect these national networks? Then you can start looking at satellite-based QKD, because that can give you some longer distance communication by transmitting quantum keys via photons to and from satellites in space. There's, of course, less atmospheric absorption to degrade the signal, and secure communication can be achieved over much larger distances than fiber. And so we've already seen some successful demonstrations of this. It's actually happening. This isn't science fiction. It's actually happening. And, it's quite a promising area of development on the physics-based quantum secure communications front. So that's why we're looking at QKD. I should say QKD is also not infallible. It's something that we call information theoretic secure, which means by the laws of quantum mechanics, you can't intercept that and you can't read the key without the authorized users knowing about it. But there are other attacks that it is susceptible to. So, for example, denial of service attacks, where constant monitoring by an eavesdropper could prevent the successful exchange of keys, and some other things linked to deploying hardware in different locations. But despite these challenges, I think the ongoing development and implementation of QKD and PQC are critical steps towards securing our digital future against the advent of the emerging risks that quantum computing pose.
Excellent. And looking at the UK, the UK government released a 10-year, £2.5 billion national quantum strategy in March last year in a bid to fund new frontiers of quantum research support and develop a growing quantum sector and prepare our wider economy for the quantum revolution. Where do you think we'll be in 10 years' time then with this technology, both in terms of its usage and the education and infrastructure around it as well?
It's a great question. I think predicting the future is a dangerous business, especially when it comes to technology, because I think, of all of the things I've talked about today and all of the things that I think is super exciting about quantum computing, quantum technologies, one of the things I'm also quite sure about is we probably don't know exactly where quantum computing is going to go and some of the things it's going to solve. People will come up with new algorithms. And in the same way that generative AI has captured our imagination, it's only when quantum computing arrives and is able to demonstrate quantum advantage that I think we're going to see some of the really innovative uses of it. And I probably haven't talked about most of those today because this is how technology traditionally works. But I think, to your point, we are seeing increasing investment across national governments in quantum computing programs because they know the potential impact it's going to have and the advantage it's going to bring as a first mover in these technologies, both from a commercial perspective, but also, frankly, from a cyber perspective as well. So I can't really answer your question directly, Paul, but I think within 10 years, we will have seen quantum advantage being demonstrated. We will have seen quantum computers and hybrid computers embedded within most large organizations where quantum technologies actually make a differentiator to the business model. I do think people are going to be much more aware of what quantum computing is. And look, no one's going to fully understand quantum. Even I've been involved in this 15 plus years. I still don't fundamentally understand why entanglement happens or why superposition happens. These are laws of nature which are just very counterintuitive. We just know how to apply these features in a very reliable way to get very robust responses. And so we've learned the language of quantum mechanics. But I do think people are going to have a much larger awareness of it. If I think about what we're doing in the bank, for example, we're rolling out training programs. I must have done webinars spanning over 5,000 colleagues. We're getting more and more interest from different parts of the organization wanting to explore use cases. And so we will definitely have quantum solutions, in my view, in production, definitely within the next 10 years. I think much sooner than that on hybrid technologies.
Exciting times ahead, I think. And just to briefly finish us off here, then, what advice would you give to banks and financial services firms looking to dip their toes into quantum computing them? And what would you say the next steps required in the short term to ensure that we're ready for that quantum revolution?
Today we're at a point in time, and I think we have a phenomenal opportunity to leverage the power of quantum computing as it matures to help us become more competitive, support our customer journeys, and deploy modernized cybersecurity to safeguard against the emerging threats. The first generation second generation, third generation of quantum computers may not change the world, but our success will depend on the motivation, the knowledge, the use of the technology, and understanding how to apply that technology as it evolves. And so for me, it's a very exciting time to be in the field because we're on the cusp of the next revolution in computation. And if I draw parallels to the ChatGPT moment that's taken what feels like the whole world by storm, we want to be in a position where the quantum equivalent of the ChatGPT moment is at a point in time where we have a very good understanding of how and where to apply that technology for real value for our customers and our stakeholders. And so my advice to people is don't start a quantum computing program because you want to generate some near-term ROI. We've got to be honest about the technological and science and engineering challenges that still have to be overcome to scale these machines. But if you see it as a risk-based approach of what this technology might be able to bring your organization versus the cost of exploring this technology now, which doesn't have to be a huge scaled program. For us, it's a small niche program with a handful of people. Then is that investment worth taking given the potential upside and downside that quantum technologies may bring? So that's a decision all organizations need to make independently. But you can probably tell from HSBC's perspective, we're very much in the camp of this is possibly one of the best investments we may ever make.
Thanks so much again for chatting with us today, Phil. To close out the podcast, we have our now infamous FinTech jails. This is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. So what is your selection for this week?
Yes, so my selection is the word, actually it's two words. It's quantum supremacy, but it's the supremacy part that I don't like. I obviously like the quantum part. Quantum supremacy is a term that is commonly used to refer to the experimental demonstration of a quantum algorithm solving a problem on a quantum computer that is infeasible for any supercomputer within a reasonable amount of time. But the problem with it is it's independent of how useful that problem is. And so it can cause hype. And in the same way that Google claimed quantum supremacy back in 2019, it kind of addressed an artificial problem that, yes, it resulted in this speed up, but it was on a problem that had absolutely no use to you or I or anyone in the world. And so although I'm a huge optimist, I'm not a fan of hype when it comes to quantum. There's too much of it about. So I personally don't like this term. It would be the word I propose for your ban list.
Excellent. That sounds good to me. I think, any kind of hype word is always good to be throwing straight into the jail for sure. Yeah, I think, as you mentioned, that quantum supremacy as well, it kind of suggests that there's a single winner towards the end, or we're kind of like battling towards some kind of victory towards the end. Do you think actually more so we should be focused on, I guess, the collaboration as well across it and just focusing on that technology and working towards the use cases, like you say, you've been discussing over the course of the podcast that we can all get benefits from?
Yeah, in my view, there's absolutely no way you can progress this type of exploration on quantum technologies without partnering with technology providers. And so our approach is actually to work with many different technology providers because, as I mentioned, there's many different types of quantum technology out there, not just different modalities, different types of quantum hardware, but also there's all these different bridging technologies and these classical technologies which have been optimized for quantum simulation and this kind of thing. So our approach very much is to partner with the technology providers. We partner with academia as well. We partner with the business so that we can bring in the domain expertise. And in some cases, we're certainly collaborating with regulators as well, right? Who are trying to figure out how we respond to these emerging risks coming from quantum technologies. this isn't a problem for any individual organization. Cybersecurity is going to impact everyone. And so we're very much at the forefront on that discussion as well, working with regulators across the globe, for bodies like World Economic Forum and areas that are trying to really understand and make our world safer from these emerging threats. So absolutely, collaboration is critical, in my view, for this to get any hope of success.
That sounds good. So, yeah, I'm more than happy to throw this into the gel. Like I say, I mean, maybe adding that hype in as you mentioned right at the start of the show, actually just brought a few more eyes to the technology and stuff. But yeah, I'm happy to throw this into the gel for now. Maybe 10 years down the line, once the technology's matured a bit more, we can take another look back in and see how it's going. But for now, Phil, thank you so much for joining us again today. It's been a pleasure speaking with you.
Pleasure. Thanks so much.
That's all we have time for this episode. Thanks, of course, to Phil for joining me. As for FinTech Futures, you can find us online at fintechfutures.com, on X at FinTech Futures, and of course on LinkedIn. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support. We'll see you soon for another episode of What the FinTech. But until then, goodbye.